Hi, I'm Brian Spinelli, Senior Wealth Advisor and Chairman of the Investment Committee at Halbert Hargrove. Today in this short video, we want to take some time to talk about something we call the tactical allocation. It's one of the many ways that we manage risk in our portfolios. So what is tactical allocation and why do we use it? In a standard portfolio where you would have a broad asset allocations to stocks, bonds, cash, real estate, and pretty much any other investable asset, a tactical allocation is a tilt to one of those various areas in the portfolio and diverging from the strategic allocation that you'd set up front. So why would you use a tactical allocation in a portfolio strategy? Well, one of the things that we've had in the recent years is that bond returns, so stable investment grade assets that you generally would have used to balance out your stocks and the risks that those present to you, have been pretty low returning. They're looking forward, things look pretty bleak for them as far as low returns. So what we're doing with the tactical allocation in the portfolio is a way to get clients more engaged and a higher allocation to stocks while managing the downside risk that will come with stocks eventually. So what that means is that while a client may have a higher allocation to stocks now, in the future if stocks start declining, we may lighten that exposure up or completely exit that strategy altogether. So a good analogy with tactical allocation is just like with driving. You're going along on the freeway, you have a choice. You can either be going with the flow of traffic and set it on cruise control, or you can be in the right lane going slower than everybody else. With the tactical allocation strategy, we're going with the flow of traffic, but instead of having cruise control on, we have our foot hovering over the brake. So beyond the why of tactical allocation, I want to get to the how do we do this, because transparency is important. Part of the tactical allocation and the strategy behind it is to have a predefined, disciplined process for managing the investment pool. So that means making decisions in advance of market downturns and being able to act upon those and not second guess the decision signals that you use. So how do we do this? When you look at the tactical allocation, it is based purely off pricing momentum in markets. It's a very straightforward, commonly followed practice, but a lot of the time people screw it up because they second guess it or they don't follow their discipline. So in our strategy, we are using pricing momentum in markets to signal us whether we should be overweight to equities or slightly underweight, if not neutral to equities going forward. I hope you found this short video on tactical allocation and how we manage part of the risk in the portfolio helpful today. If you'd like more information, please visit our website and you will find a quarterly insight letter dedicated specifically to this topic, or contact Halbert Hargrove or your service team here for more information. Thank you very much for watching.